Hello, this is TJ. Last spring, I really wanted to introduce my 5-year-old grandson to charts. I know 5 is young, but I just wanted him to be able to identify entries and stop losses because I feel like that's the most important thing. So I created an indicator to make it super simple for him to identify, and it's called Bubblegum Charts. I have been trading these bubblegum charts for several months, and they really are helpful. They make it easy. There's no questioning where to get in. So they can be used on any asset class, any time frame. And today I'm going to show you a 10-minute chart on IWM. Going forward, I'll create other videos and other time frames. And if you want to see whatever it is that you trade, what it would look like on a bubblegum chart, drop it down below in the comments, and maybe I'll create a video and show you what it would look like on your time frame. So this is what the chart looks like. As you can see, there's only 2 colors, hot pink and green, lime green. I want you to first look at this line down here. It's called the BubbleFlow, and it shows you the strength of whatever market you're trading. Let me get rid of this. It's not letting me, okay. When the indicator is above 50, it turns green, and it tells you that potentially the trend is changing. If it gets above 80 and it flattens out, then you know you're in a very strong trend. Likewise, when it crosses below the 50 and turns pink, you're potentially changing trends. And if it gets below 20, you're in a strong trend to the downside. This BubbleFlow needs to be changed and adjusted based on the time frame of your chart. So for a 10-minute chart, if I go to settings, you can see I have it set at 120, 120, 11. And if I wanted to change the color theme, I could do that here. For bubblegum colors, classic, which is just red and black, and monochrome. So if you trade a different time frame in the PDF that comes along with the bubblegum charts, you would see what to change this to. So for 10-minute, 1 minute, 5 minute, 10-minute, 15-minute, 120 is a good setting. So you can see that with the color of the BubbleFlow matches the color of the candle, which is what I'm saying makes it so easy. A 5 or 6-year-old can identify when to get in and when to get out. So let's just start over here. This is November 5th, and I'm going to make this a little lower. So in the morning, we have a gap up, but the color is still pink. So we would wait to see what's going to happen. And then at the end of this green candle, we can see that our BubbleFlow is moving to the upside. So we would go long at the end of the candle, or the close of the candle right here. And we would put our stop just below the candle like this. And as the stock or whatever you're trading, you can see it went sideways, but you're fine. It's basically just making a bull flag. So you would keep your stop here. As the market goes up, you could move your stop up and take profit once your stop loss gets hit, or wait and see what's going to happen. You can see the bubble flow is above the 80, which tells us that the trend is really strong and we're safe to hold all. This is the 5th of November, all through the day. And then towards the end of market close, we start to drop back. So I would take my profit up here. And just so you can see the risk to reward, if we go long at 242.65, our stop is at 241.66. So basically a $1 stop, and we get up 245.50 at least you could get. So that's a 2.85 risk to reward. You never got close to your stop. And then the next day was November 6th, and we have a gap down, but the candle is still green. But we need to look at the bubble flow indicator is moving down. So we would not go long as long as this is moving down. We would wait and see what was going to transpire. So we see we crossed the 50, but then we cross back up. So we have a pullback, basically a break and a retest. So anytime the bubblegum or the bubble flow gets around the 50 is the most dangerous time, because if it hovers around here, that's telling you that you're in chop and just to stay out. So if you wanted to take this down signal, you could take it. You could go short here. I would not put my stop right there. That's way too tight. I would put my stop up near the top of this gap. I know that's a pretty big stop, but you have to let it kind of play out and see what's going to happen. So potentially you could have taken a loss here. If you held to see what was going to happen, you would have made money on this big downdraft. If you didn't want to take this trade, you could have waited for confirmation, meaning the bubble flow is going even lower, which means you would have gone short at the close of this big candle with your stop up here. And that was 241.74 down to 240.28. So you probably could have gotten $1 out of that. Let's look at this risk to reward. So not quite 1-to-1, or maybe you could have gotten 1-to-1, depending on what you were looking at. And then if we keep going, we can see the market pulled back in. If you wanted to hold, you could have, because our bubble flow has not gone green. It went back up towards the 50, so we have a pullback, and then at the end of the day, it continued to fall. So you could have taken this trade. If you wanted to look for another trade, draw your trend line, go short here, hold it overnight, and let's say you went short here, put your stop right above, and you held to the next morning, you would have had a 3-to-1 risk to reward. You can see the bubble flow indicator went back below the 80. This right here we have pink candles, but they're moving up because our bubble flow is moving up. So we're not going to go short. Of course, in the moment, we don't know what's going to happen. So we could have drawn our trend line. And if our trend line is not broken, we just stay out and see what's going to happen, because you wouldn't go short on with the bubble flow going up. But right here, our bubble flow turned green. So we could have gone long at the close of the candle. And I would put my stop at this swing low, so about right here. And we are getting close to the end of the day. So we could have taken our profit at the end of the day for a risk to reward of 1.27. Or if you wanted to take partial profits and see what's going to happen the next morning, we had a gap up. And you could have had a 3.71 risk to reward. If you didn't, if you got out, and then you're wondering, well, how do I take advantage of the next day? I wouldn't go long on this big gap up because that's too much risk. So I would wait and see what's going to happen. You can see we're having a pullback. So we just draw a trend line and wait for it to break. So we have a very strong bubble flow. It's moving above the 80. So we know we're in the uptrend in a pullback, and we're looking for a long position. So we could have gotten long anywhere in here. Our stop at this low. And the remainder of the day, we went up. You see the bubble flow, how it's staying way above the 80. That means the trend is very strong. And by the end of the day, you would have had almost a 3-to-1, 2.91. Take your profit, see what's going to happen the next day. So this is the 11th. We have a gap down, and we have a lot of chop. There must have been news on this day. So our candles are green, so we're still looking for an entry. So we would take our trend line from the top and wait for a break. So all this, we would just let it chop. When this closed, we would go long, and I would put my stop way down here. If you're not comfortable with that much, of course, you could move your stop up, but I would probably give it room. And you can see it didn't do much the rest of the day. It went up and kind of chopped sideways on this pullback. Maybe you took profit. So this was not a 1-to-1, but you could have made a little bit of money. If you wanted to take the chance and trade at the end of the day, you could have done the same thing, draw a trend line and bought at the end of day. I probably would not have done that, because if you look back, we've had a few days of the bubble flow staying high in the green, and this is just a 10-minute chart, so anything can happen. So let's look at the 12th. We have a gap up. If you wanted to take this and put your stop at the low, you could have. When this big candle came down, you would have taken a loss. So you would have gotten in at 245.76, and you would have taken, when it was clear, this is a big sell candle. Even though it's green, it's going down. You would have gotten out at 245.20-ish. So like a 50-cent loss right there. And then I would just wait to see what's going to happen, because you can see our bubble flow is trending to the downside. I wouldn't go short, but I would wait and see. And then the last candle of the day, you can see how we have this chop going on, and the bubble flow is hovering around the 50. And that is the most dangerous part of the chart. So we want to wait either for a break up or a break down. And we can see the last 10 minutes of the day was a sell candle. You could have taken that short, or if you wanted to wait till the next morning to see what was going to happen, we get a gap down. You would have gone short at the close of this candle with a stop at the top of the wick. And you can see the bubble flow is below the 20, and it's just laying pretty flat, which means the trend is very strong and the market just keeps falling. So if nothing else, these colors tell you do not go long, do not go long, do not go long. Even if you don't want to go short, just stay out of the market if you don't want to short or buy puts. So as the market is falling, you could have lowered your stop loss and profit as it's falling until you get stopped out. Or if you wanted to just hold and see what's going to happen, this is the end of the day right over here. So you could have made a 6-to-1 risk to reward based on this candle. Or maybe you took profit up here and you wanted to try to get back in. Again, you draw your trend line and wait for a break. And you would have gotten in at the bottom, at the close of this candle, put your stop at the last swing high, and see what's going to happen. Your risk is very small. Even this is a 3-to-1 risk to reward. And you should have confidence because your bubble flow is way below the 20. This market is not going to come back until this bubble flow turns green. Okay, this is the 14th, November 14th. You had a gap down. If you wanted to take that, obviously you would have been stopped out, but you have to also look at market context and look back and think, we have had a what? From 243.50, a $10 move in one day. That is a big down day for this instrument, the IWM. So I would definitely wait to see what was going to happen, to see if there's a snapback. And you can see on the bubble flow the day before, it's flat, and then it starts curving up, which means buyers are coming in. If you wanted to try to go short again, you would have drawn your trend line. When it broke, you could have tried to go short. But look at the bubble flow. It's up near the 50, which to me tells me it's probably just going to chop. But if you wanted to take a chance, you would enter a short there with a stop above the swing high. And the rest of the day, you can see it just pretty much went sideways. It didn't do anything. This was the last candle of the day. If you held it into the next day, you still had a small stop loss. And the next day, or over the weekend, then Monday, the market continues to fall. If you got out on a Friday, that's totally understandable. This is the open on this candle of Monday, November 17th. Maybe you wanted to try it. So you would go short at the close of this candle with a stop just above this swing high. And you can see the bubble flow was going sideways, and then it started dropping. So that should have given you confidence to hold your position. It never got close to your stop loss. And by the end of the day, you were almost at a 2-to-1 risk to reward. Then on the 18th, you can see we chopped slightly down, but again, you have to look at market context. We have dropped all the way from 243 down to 231. So there's a good chance that there's at least going to be a bounce. So if you wanted to wait it out, that's reasonable. So the 18th, we have red candles or pink candles, but the bubble flow is moving back up, which means buyers are coming back in, trying to see if they can push this market up. This green candle is the open. Well, it's 9:30. It's not the open. The 9, which is 12. 9. I'm on the West Coast, so this is 9:30 West Coast. So that was your first indication that maybe there is going to be a bounce. If you wanted to take a long position, you would wait till the close of the candle, put your stop below the low, and I would target this last high. This is the day that I'm filming this on, so it hasn't reached that high. I don't know if it will reach that high, but you can see BubbleFlow is chopping above the 80, so possibly by the end of the day, it could hit the target, or it could come back down and you could get stopped out. Maybe now we've had an entry, we've had a retest. You could move your stop to break even and see what's going to happen. So I hope this has been helpful. If you're interested in Bubblegum charts, they're available. There's a link in the description below this video. Again, if you want to see your asset traded or what it would look like on a chart with the Bubblegum chart indicator, I can do a video on it. And I am really excited about this. I think if my now 6-year-old grandson, he doesn't trade, but it's never too early for me to get him familiar with the charts, how and when to enter. This is a system all on its own. This is all I've been trading the last several months. And just like anything, I have losses, but I have very profitable winners, and I have clarity and confidence in what the chart is doing. Thank you for watching. All the best. Big profits to you, and I'll see you next time.